Happy Father's Day. Why do I say that? Because we're going to be trading Google next week. And why do I say what I have to say is for the MMTs to understand that Google is up here. This is a weekly chart. We're going to be using the monthly contracts, regulars, and we're going to do a component chain. Let's just say that we will start these things between 865 and 890, and we will start the out of the money puts and calls from these price brackets in Google. Right now, I'm going to cover the weekly bull cycle of this long-term bull cycle that started way back over here. Way back in 2013 on 3/1, that's where this bull really started. We had some weekly pullbacks here in the same month. Well, let's take a look. That's 311. This is where we undercut on a weekly, a 20-week. This was at $825. Let's see what the low was. The low was $761, and they came in on the 50-week. That is a rising 50-week bull to make the high. The reversal is right above the 10-week. And not only that, let's see what the value is now. It's 852 is the value of that blue line. Now, with the counterside volatility to the upside, we're going to see what kind of rising bottom that this is put in. Volatility, you can see the volatility on the bottom here, that weekly wick. Okay, let's go to a daily. Now, when we look at a daily MMT, what are we looking at? We're looking at one thing, where the reversal from 920, so you go 920 to the low of 847. From the top of that bull top double reversal, that was a $73 reversal, but unlike I showed the S&P 500, it's got a long-term rising 50-day simple moving average, the 100-day moving average, and the 200. These are definitely strong bulls. The bull lost $73. Then the bull came back, and what the bull did is that on the date of 6/6, they got a low of 847. So let's do the bull side now. So 847. The 847 low up here to the 891 high. So what I would like to tell people, from that very low to that high, the bull got 44 points, 44 handles out of it. Let it be known for the bull. Now, the bear got 73. So when you take this number here, MMT, that reversal is where that put side of the market during that time within the volatility, it was the put side. Yeah, you could have made some call side trades very quickly intraday. Maybe you got $1.50 to $2 out of them, but then they rolled over and made lower lows. The put side paid, but it's when we got here. So when you take that reversal and that upside, that's 44 handles to the good. I'm just instructing the MMTs on the Google trade that the bear is still in control of the overall reversal, and our ratio would be $0.23 is where the bear is. Now, but that's what just this movement. We are going to update from the high back to the low, and that there now will get calculated. So when we got here to that high, the bear still had control by 23 handles. That meant that the trend to the upside was weak versus the bull upside was weak versus the 73 handles down and 44 handles up. Now, here, we'll do the following. We're going to take the high of 891. So that was 23 on the last one. Make a notation of it, MMT. So we're going to take the high of 891 to the low of 865. So let's clear that. MMT, go 891 and let's minus the 865 MMT. That's going to equal 25 more handles to the bear side of the original reversal of the calendar 52-week high. So now what we want to do is the following. What we have MMTs, what that reversal is, that now the bear, if you take that amount of reversal to that low, on this particular count, we got 48 points that the bear side of the trend is weighted in Google. That means because it's 48 points, we are going to update that low bull to its current high, and then we'll subtract that out and then we'll have the overall bull and bear actual dollar price movement of this trend. MMT 875, let's call it, to the high of what this cycle was, and the high of that cycle was 879. So if you go from that low to that high, those are bull points in the overall price action. Add them together now. From this intraday low here to this top, that added $17 to the bull count. Now I'm going to do the final totals, and I'll just leave where the close was. Now that we've added on the bull trend, we can clearly see that the bear from the top, the bull and the bear both, is that the weighted trend, as far as that retail terminology, dollar price, is that I think it's 31. So what I'm going to say to the MMTs is that the bear still has $31 in price reversal. That means until that number is worked off and contracts, that means at the upper end of the resistance levels will have more challenges because of the $31 reversal for the bears in control. Still, he's still in control of $31 throughout the whole price movement. We're going to start with the MMTs, the 865 call. They got deflated down here, so we're going to do the 865 call in our options market maker. Then we're going to take a look at where the bottom of 750 was and that they went up to $15. This one is on the 870 call. The next one we're going to do is the 875 call, where once these calls got up here, they got more deflated. But this was the movement up in the calls on the range. They went from the low of $6 to the high of $11.60 in those calls. Okay, so these calls for the monthly expiration, these are monthly contracts, they're still in the deflated area. And they could still come back down a little bit lower depending on the movement, but we'll be ready for it. Here we have an 880 call, and we're going to set price alerts on it, and we're going to be ready for it. And all of these are a monthly contract. The last area that we would look at is an 890 call that was at $42 a contract, and the public lost all their money. Look at them. If you had 10 contracts up here at $38, or you bought 10 contracts at $18 and you were buying 10 contracts at 26 or 20, you'd have $25,000. It's only worth $3,000. That's what your value's worth. So we're going to be looking at this side of the market. The other side of the market that we'll do in today's training is that we'll go right back to the 865 put, which is deflated. You can see where they are. That's an 865. We're going to make sure that we have the 870 puts lined in there below, and these are all below the strike prices for the calendar month of what Google will do. We're going to cover this 875 put was $30. It's still deflated, but remember that Google only closed at 875 right at the strike. And so basically we'll have the 875 for now. Then what we'll do is we'll go and we'll load up what the ranges were. That's an 880 put for the monthly. That's $5 in the money where Google closed as far as the put side. That's an 880 put that's in the money. And then just in case it wants to break out. We'll be watching the 885 put that has a value of $10 in the money for that side of the market. And we can clearly see that it's a put chart. So we both have our calls and our puts ready versus the Google daily trend and resistance levels to square off next week. Remember that the volatility, the bear volatility, is in play from that top reversal. Offline in the training, I'm going to talk more about how it applies to the pricing component in the call and the put as a market maker. This is not a day trading, hey, I want to trade options type of deal. You want to do that, hey, go get this is a little bit different. So quite a bit different. It's like night and day difference. So based on this trend is going to be the values of both the call and put structure of Google.